Over the past decade, corporate America built its identity around boldness, rapid expansion, disruptive innovation, aggressive hiring, massive capital expenditure, growth at almost any cost. That was the tone of earnings calls and investor conferences. But in 2026, something feels different. Is corporate America becoming more conservative by design? The answer increasingly appears to be yes, and not because companies have lost ambition, but because the environment has changed in ways that reward caution over aggression. The first reason corporate America is becoming more conservative by design is the cost of capital. For years, ultra-low interest rates made borrowing inexpensive. Companies could fund expansion, acquisitions, and speculative projects without immediate pressure on profitability. That era has shifted. Higher interest rates and tighter capital markets have forced executives to think differently about leverage and spending. When debt becomes more expensive, risk tolerance naturally declines. Conservatism becomes strategy. Capital allocation has moved to the center of boardroom discussions. Instead of chasing market share at any price, companies are prioritizing margins, cash flow, and return on invested capital. The language of hypergrowth is being replaced with efficiency and discipline. Is corporate America becoming more conservative by design? Look at hiring patterns. After aggressive workforce expansion in earlier years, many companies have slowed hiring or restructured teams. Headcount growth is more measured. Productivity metrics matter more. This is not necessarily retrenchment, it is recalibration. Another factor is demand volatility. Over the past several years, companies have experienced unpredictable swings in consumer behavior, supply chain disruptions, and geopolitical uncertainty. Forecasting has become more complex. In such an environment, aggressive expansion can backfire. Overbuilding inventory, overcommitting to fixed costs, or expanding into new markets prematurely can create vulnerability. Conservatism becomes a hedge against unpredictability. Artificial intelligence is another revealing example. AI is transformative, but deploying it at scale requires enormous capital, data centers, specialized chips, energy infrastructure. Instead of racing blindly, many corporations are phasing investments, testing use cases, and demanding measurable returns before scaling further. This reflects deliberate conservatism. Even in innovation, discipline now guides spending. Is corporate America becoming more conservative by design? Look at liquidity trends. Companies are holding larger cash reserves relative to prior cycles. Share buybacks and dividends are balanced against maintaining flexibility. Strong balance sheets are viewed as competitive advantages. Liquidity is no longer idle capital, it is optionality, and optionality is conservative by nature. There is also a cultural shift in investor expectations. Markets have become less tolerant of vague growth narratives without profitability. Companies that demonstrate steady earnings, predictable margins, and controlled expenses are often rewarded more than those promising distant breakthroughs. Executives respond to incentives. If the market rewards conservatism, corporate behavior follows. Regulatory complexity adds another layer. From trade policy to technology oversight, companies operate in a more scrutinized environment. Expanding aggressively into new sectors can invite regulatory challenges. Compliance risks influence strategic decisions. Conservatism reduces exposure. Supply chain fragility has also reshaped thinking. Earlier models prioritized efficiency and just-in-time inventory. Recent disruptions exposed weaknesses in that approach. Companies are now diversifying suppliers, building buffers, and securing long-term contracts. Redundancy, once viewed as inefficiency, is now considered resilience. Is corporate America becoming more conservative by design? The answer also lies in executive compensation structures. Performance metrics increasingly emphasize sustained profitability rather than rapid top-line growth alone. Incentives shape strategy. Another dimension is technological maturity. Many digital markets, cloud computing, smartphones, e-commerce, have matured. In mature industries, incremental gains matter more than revolutionary leaps. Operational excellence outweighs disruption. Conservatism aligns with maturity. Importantly, this shift does not mean innovation has stopped. Research and development spending remains significant in many sectors, but projects are evaluated more rigorously, capital is staged, risk is calculated. Aggression without clear return is harder to justify. There is also generational memory at play. Leaders who experienced recent volatility, economic shocks, supply chain breakdowns, rapid rate changes, carry those lessons forward. Institutional memory shapes decision-making. Conservatism becomes embedded in corporate DNA. At the same time, being conservative by design can create trade-offs. Slower expansion may reduce short-term risk but could also limit long-term upside. Companies must balance caution with competitiveness. Moving too slowly in AI or digital transformation could concede ground to more aggressive rivals. So the question is not whether corporate America is becoming conservative. It is whether that conservatism is strategic rather than reactive. In many cases, it appears deliberate. Boards are emphasizing durability. Executives are prioritizing stability. Investors are rewarding predictability. Is corporate America becoming more conservative by design? In 2026, the evidence suggests yes. Conservative in capital deployment, conservative in hiring, conservative in forecasting, conservative in expansion pace. But this conservatism is not about retreat, it is about sustainability. After years defined by disruption and rapid scale, the current phase favors resilience. Companies are designing strategies that can withstand volatility rather than merely capitalize on optimism. In a world where economic conditions shift quickly and technological cycles accelerate, durability becomes competitive advantage. And that is why corporate America is not just acting more conservative, it is becoming conservative by design.